Hi there. In this video, we are going to look at the research and governance L1s, including Cardano, Polkadot, and Algorand. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. And my Substack is now available, so that's what the QR code is about. I'll cover a little bit more what you can get from there near the end of the video. So, the weekly chart of Cardano is still at the early stage of the accumulation cycle, entering the mid stage, let's put it this way. If we cross-reference what happened back in 2023, after the panic over stage, there was the automatic rally that sets the trading range top, subsequently a sign of strength, where price advanced with volume. So that's the stage we are looking forward to see for Cardano. So that's the big picture. During this time, expect more tests, meaning the price go up and down to shake out paper hands. All right, that's normal within the accumulation cycle. It happens in different manners. Sometimes it goes deeper, sometimes it dips a little bit more shallow. But that's the nature during the accumulation cycle. Until the point we see sustained volume, re-challenging the trading range top, then we can confirm that a sign of strength has come. But that doesn't mean it's going to go all the way to the next distribution high immediately, as we can see from 2024. It surged to a level you can almost consider that another mini distribution. And just to have it fall back to accumulate a second time. And that's when it really shoots up to the real distribution. So it depends on how much leverage the whales have in order to launch the price to a crazy level. I shared many times in the past, if the whales foresee a bunch of very good news or things that supports liquidity and risk on sentiment, they can let it launch, and you can see the rally actually finishes in around 5 weeks. And then what's subsequent is the late FOMO. So that's very key. Just a month to two positive news that can let the price go to a crazy FOMO level. So while we are still seeing all sorts of pessimistic news flying around, maybe economy, job loss, wars, credit crisis, all that, that's setting the backdrop of the volatility that's going to come. When we go to the daily chart, Cardano has exited the downtrend that started August last year. So here, the base case is the range bound that I shared in the sessions before. So the move last Sunday coming down to retest the support, and then now coming up to re-challenge the red key level of 0.28, all the way to this yellow dash line of 30 cents shouldn't surprise you. So the range is actually from 24 cents 50 all the way to 30 cents. It has been that way since the beginning of February. It hasn't changed for the past 6 weeks. All right, so when the economic data comes in just a few days, that's going to potentially push the price to either side to re-challenge either that resistance or the support below. And the development of the private credit crisis, as well as the war in the Middle East, that's going to be combined three drivers that's going to change the direction of the crypto market. So here we see the price of Cardano flattening. Okay, it's not going up. This uptrend, initially, if there was a trend, it has been broken yesterday. The volume isn't very, I would say, at most average across the past 4 to 6 weeks. It's not something like this big white candle over here on the 25th of February with higher than average volume. It's not the case. So right now, the market is still uncertain, just moving narrowly around this mini range within the bigger range. Okay, the purple key level of 25 cents 80 to the 28 cents red key level. That's what the bulls and bears are playing over the past 5 days. Right? Now, let's move to Polkadot. Remember, I'll share more about the dashboard that I am going to launch near the end, so stay with me for just a couple of more minutes. For Polkadot, this is, again, same. We're waiting for a sign of strength. That volume bar 2 weeks ago was pretty impressive. So likely, during that week, the war broke out. Some people were crazily selling, while some people were crazily scooping out what's been sold. That's why we see this bar that's like 5-6 times higher than the average, the neighbors. If I make it larger, you see how crazy that is. 6 times may be an understatement. Okay? So that's how I interpret this candlestick, the story behind it, why the volume is so high, but the price didn't drop. And it was on neither it rose a lot nor dropping a lot in the week the war broke out. Okay? So this is what we are looking forward to see, the sign of strength. A bunch of white candlesticks. Some red may get in between, but those red doesn't come with big volume. Okay, and then slowly climb to where? Challenge this 5.15 orange key level. That's where the automatic rally set the trading range top. Okay, daily chart. Polkadot, slightly downtrend it has been going through. Let's remove this. It's blocking our view. So it has been coming back down to the orange key level of 1.45. And yesterday it just closed below it. So how do we interpret this? It's basically the same range since the end of January when it closed below the dashed line of $1.67. It came to challenge it the end of Feb, beginning of this month, just get rejected after 5 days of challenge. And now it's coming back down, potentially retesting the support of 1.23. That's what it did for over 2 weeks in February. Until the 25th, it shot up, and then the war broke out, and now it's slightly trending back down, heading towards that support again. So let's hope it doesn't break that support, because if it does, the next will be the red key level of 0.97 as support. That's where the October 10th last year, tariff announcement day, tested. You see this long way hitting all the way to that red line. Not in the history of Polkadot has tested it since 2021. All right? Now, Algorand. Testing, all-time low. We went very, very deep just to find support around the similar level. When we get to the daily chart, we'll be able to see clearer, but it's around the red key level of 0.087. That's the level of the October 2023 or the 2023 accumulation cycle low. All right, this time it went lower than that. So the paper hands test probably has done its job by shaking out wherever that aren't really the true diamond has. So same thing, sign of strength. the second time now, okay? The first time happened back in July. Now we are aiming to see the next one. Okay, something similar to the one here in 2024. You see a bunch of white volume bars, higher than average, bringing the price to re-challenge the trading range top. So similar story. Trading range top around these two blue lines, light blue key level of 24 cents, blue key level of 26 cents 40. So we want to see something coming back to challenge this zone again. In terms of daily chart, it has exited the downtrend just this week. We talk about it. Okay? The windows are very close to each other. March 7th and March 13th, and the breakout happened on the 10th. Okay? There was strong rejection above the red key level, but the subsequent days helped the bulls sustain above that level. However, it's coming back down to retest this support. You can see as of this moment, the bulls and the bears, at least today, is fighting almost at equal strength. If you look at the wicks from the top and the bottom, it's almost equal strength. For one, it's the weekend. So later, in the next few hours, there's still 5 hours, almost 5 hours and a half left. Asia will wake up and get into their working week. So there may be a little bit more price move near the end of the candle close. And then that comes the Fed announcement, economic data. That's going to drive the price to either retest the orange key level as resistance now, 0.095, or shoot back to test the support of the red key level. It shouldn't surprise you if it goes through the red and come back to challenge this yellow dash line at around 0.08, because it has come down at least 3 times, if not 4, over here. Okay? Just quickly take a look at this red line over here. All right? That's where the 2023 accumulation cycle tested or bottomed around. Okay? We have tested this multiple times and set an even lower low. But, okay, let's hope this yellow line will defend the low for this accumulation cycle for Algorand. So, now let's get to the Substack report that I'm going to launch next week. So what you'll get is a weekly market dashboard. I'll have 2 different versions. So for different audience, different plans. One is this one that I'm showing you with broad market data. There are a couple of indicators with clear description, helping you understand what they mean, and then the macro data, plus equities and fixed income. So key ETFs that help us gauge where the market is. Okay, and commodities, gold, silver, oil, agriculture, as well as BTC, ETH, and Solana. Okay, you'll see all these indications and even real estate. So you'll see whether they're at historical high, how deviated they're from the 200-week average, and the money flow. And also an additional perspective that helps you understand, okay, gold, silver, Bitcoin against the money supply of the US, where they are in terms of their value. Is it historical high? Again, same terminology, so you can compare across different assets. All right, so that's the Substack. If you haven't subscribed or joined a channel member that get access 2 days earlier to these videos, feel free to join now. And for the Substack, I've put in a link in the description. So look forward to see you there. Thank you.